as what's going to happen for this year moving forward. Okay. If you don't know me, some of you, I see some people I don't know. So my name is Amin Walker, and I'm the owner of First Financial of Baton Rouge. And we are a consulting company. We also do accounting, we do taxes, and we do some legal support work as well. So we like to consider ourselves a one-stop shop for business owners, hopefully help them to make their businesses better. Okay. So we're gonna make sure we stick to this schedule. So the first section is actually called preparing for taxes for 2022. I want to start by saying, it's been a weird year, a difficult year for a lot of people for many different reasons. And hopefully, 2023 will be a better year. Just remember that 2022 is in the past. So nothing you can do about 2022 except to make sure that your 2023 is better for you. Okay. Everyone should have by now started receiving a bunch of tax documents. So, you get 1099s from banks for interest, you get 1099s for your businesses, you get W-2s, you just get everything. So you need to make sure that you're ready for when tax season opens, which is on January 24th. As of now, and I don't see any reason why they should delay it. They delayed it a little bit last year, but that was because some last minute tax law changes. This year seems like we'll be ready to start right on time. We are doing something a little different this year. We, like many other people, suffered a breach last year, which we sent out an email to everybody to let them know. We've instituted a lot of new policies and procedures and safeguards to make sure that everyone's information is safe. We caught the other one very quickly, but we want to make sure that never happens again. So part of that is we've added Steve onto this call, who is going to talk about cybersecurity. And also we have implemented a new system. It's called TaxDome. You should have all received an email with an invitation to sign up for TaxDome. You will create your own password, and then you will organize all of your documents and upload those with your camera phone, or you can scan and email them or scan and upload them. But everything is on there now. The tax organizer that you're used to filling out is going to look a little different because it's a question and answer that you type your things in. And then if you answer no to certain questions, it skips right over them. If it asks you if you have a 1099 and you say yes, it's going to provide a link for you to upload that 1099, or a group of 1099s right into the TaxDome system. It will alert us, and we will go in and organize those. But the important thing is gathering your documents and making sure that they're ready. I usually recommend you have a drawer or a box or something. Everything that says, important tax information, just make sure that you throw that in there. We have time to do certain things. I know some of you say, well, when can I put money into my IRA, or how much should I put into my IRA? We have time on that. You actually don't have to contribute to that until April 15th. So a lot of times what will happen is we'll prepare your actual return, and we can tell you, here's how much it would change if you want to contribute to that. So don't fret over that type of thing yet. Right now, it's just gathering documents, getting things together. Everybody wants their taxes done right away, but if we don't have all the documents, obviously we can't do that. The goal is to file early. So the faster you can get us all of your documents, which a lot of people have already done that on the TaxDome portal, we will get started on your taxes and get those done, because of course, like every year, the goal is 100% no extensions. So hopefully we can do that. This year, we did have some last year, but most of the ones we have are because people were waiting for documents from other places. Okay. Now I'm 2 minutes ahead, so actually I'm going to take this time to have you look behind me and smile, Ebony, wave. So this is Ebony from Compassion Design, and she is responsible for making sure that these things come together for me every year, and make sure she does all our logo, website, branding, and everything. So she gives up her Saturday to do this. So I just want to make a special thank you to her. Okay. This year, I'd like to look at changing a few things. I know everyone's used to dealing with me, and everybody calls me for everything that there is. And that's okay. That's understandable. We are going to phase in and hopefully get you all to be able to deal with some other people a little more. Adele is the one that prepares almost all of the tax returns. She's been a CPA for, I don't know, 12 or 14 years. She's very capable. But if you all will notice something, every tax return has my name on it, and I sign every tax return every year. So I still will be reviewing the tax returns, but she prepares most of them. So if you have tax type questions, my thing would be hopefully to start phasing her in more. This is her fourth or third year with us doing taxes. So I think everybody should be used to at least talking to her. If there are accounting questions, those can be directed mainly to Pam, who most people know has been with me since 1999, is our COO and also been made a partner this year with me. And also Jamie Turk, who some of you have talked to, has been a CPA for 40 years, and he has been made a partner as well. So hopefully we can start to shift some of that stuff to them. I really want my focus this year to be helping you all to develop your businesses, to grow your businesses, to answer those hardcore consulting questions, to do more of the planning with you than some of the everyday things that go on. And so hopefully we can kind of move towards that in the near future would be really good. Okay. So let's jump in. The next section is tax law changes for 2023. There weren't a lot of real big major ones, but there were some. And so I do want to go over those, but actually I just jumped out of order, and Ebony just reminded me by sticking it on the screen. So actually we're going to hear first from John Paul Caswell. He is the owner of Iron Horse Financial, and he spoke to us last year, but he's going to talk a little bit about some things you can do as business owners to help retain some clients. So I'm going to turn it over to JP.
Good morning, and you are ahead of schedule. So I just had to reboot my computer. So I'm going to talk for just a minute while this does come up here. But everybody else runs late, and Amin runs on time and then even ahead. So that's great, I guess. So I want to talk to you guys about, I don't know if you guys can see the video or not. I'm switching over to my computer here as soon as I get this pulled up. I have sorry guys, 1 second. My goal for this year is to get a new computer. My Surface Pro 4 has probably had its, has had all it's going to take. So hopefully I get this to pull up. If not, I will make sure to send it out. Well, let's see. So what I want to talk to you guys about is how to attract, retain, and keep some of your best employees. Right? How to get golden handcuffs for those employees. How to make sure that when you're putting together a compensation plan, the compensation plan is not just money. So as we know, people will leave you to go to work for more money. But if they come to work for you because you pay more money, then that's a very good likelihood that they're just going to leave if somebody else offers them a little bit more money somewhere else. So my office, my agency at Iron Horse Financial, one of the things that we do and do very well is to help you put together these compensation plans that as you're hiring new people that you want to bring on, maybe as key people in your organization, maybe someday partner, someday potentially owner, that you structure those things to where it is enticing to them, but you're not giving everything away. So let's talk about what a good financial plan looks like. First of all, let me just tell you what they're not. All right. So if you use things to bonus employees like cash or stock options and ownership and equity in the company, once that's out of the toothpaste bottle, you can't get it back in. Right. And that is, if you talk to business owners, that if they have any regrets or any mistakes, they've partnered up with people they shouldn't have, right? Or they gave equity to people that they shouldn't have. especially early on as the business was still, skyrocketing up. And now they wanted to give this person maybe 10% ownership because they were loyal in the beginning. Well, what they're doing and bringing to the table is no longer, worth the 10% that they were given. So how do we structure these type of plans to where we're not just giving them away? Well, another thing that good retention bonus plans don't have is retention bonus plans are not necessarily 401k and benefits or the fringe benefits, right? So health club memberships and these, they're great for culture. They're great to take care of employees. Employees sometimes appreciate that. However, if you're small businesses on this call, it's very difficult to compete with those things with some of the larger organizations. Larger organizations are not only going to have 401k, but they're probably going to have a better match, right? They're not going to pay for the gym membership. They've got one in-house, right? So these are the things that you're up against. So it's great to be offering those types of services, right? But on all those types of services, what you do for one person because of ERISA laws, you have to do for everybody. So let's talk about those key employees. On those key employees, we want to do something for them that is unique, that is, again, doesn't have to be done for everybody else. So if you give somebody, part money towards their retirement, then you got to give that to everybody. So I like to use contracts, right? Contracts and agreements. So it's myself, it's the CPA, it's the attorneys. We're all kind of putting together that financial team to where we're all working together. It requires contracts, it requires funding, and it requires tax law to put these things together. However, if there is a delayed gratification in those plans, then people will stick around to get it, right? So what I like to do is not just only have a financial benefit later on, but I want an emotional tie to it. If I tell somebody, listen, if you stick around with me for 10 years, I'm going to give you a $100,000 bonus. That may or may not motivate. 10 years seems a long time off. But if I can put that to an emotional tie, then it tends to go a lot farther. So let's say, for example, and this is actually a true story of a client who had a key employee that was a single parent, had an 8-year-old child. The 8-year-old child, good student, whatever, but the employee was really key to the organization. And so for the business owner, he said, here's what we're going to do. I want you to stick around. And if you're with me for 10 years, then starting in 10 years, I'm going to pay $25,000 a year for the next 4 years for your child to go to college. We'll do it as a college fund, right? So I'm not just giving them money. We're giving them a college fund at $25,000 a year. Well, what did that do? Well, first of all, it tied that employee to the organization for 14 years. And by the way, the owner wanted to sell out in 5 to 10. So if we have a fully funded bonus program for the key people that will go on after the business owner leaves, that business is now worth a lot more money to a third party buyer, right? But what do? We use the funding on this in a plan that, okay, if the employee stays, it's fully funded. If the employee leaves halfway through, they leave, the money's still set aside, but it's not vested. And so the employee cannot take it with him, right? If they die, I like to use contracts that also have a death benefit. So if they were to die or be disabled or some other way that they, are no longer with the organization, if they leave and go to work somewhere else or they were to pass away, either way, the business is hurt, right? So I need to have key person coverage on that person. So if they stay, if they go, however, this is fully funded and the business will be able to benefit either way. But what it allows you to be able to do in your conversation is to tell that employee, I want you to stick around, but every year we're not going to sit down and do this. Hey, I want to raise, and this is what I'm being offered over here. And I'm not going back and forth on this. Right. So part of that is we can do maybe a standard of living raise, 3-4%, whatever the organization can afford. You get kind of a standard type of a plan to keep and retain employees. But you're not going to be coming with an employee that tries to tell you that, man, now I need to have a 10%, hike, or somebody's offering me a $25,000 bonus to go over here. You're not going to be in those type of conversations. Another thing I like to do on the beginning, let's say your business is expanding and you're wanting to add business professionals. If you're like a doctor's office or some organization, an engineer, and you're wanting to bring on another professional. If you try to compete dollar for dollar on money, it can be very expensive to bring that person on board. But again, if we can be to where we're paying a competitive rate, but they can understand where there's value in this delayed gratification and this delayed payoff, if they can see that benefit, then not only will you be able to hire that employee, you'll be able to hire that employee with less out-of-pocket cost, but then have, again, the side agreement, the side pool of money that if you stick around for a certain amount of time, all of this can be yours. So I, like most business owners, I applaud and I appreciate loyalty from my employees, but I don't expect blind loyalty. I'm going to build that loyalty in because there is a financial gain for that employee to stick around with me. There's a safety net if that employee, for whatever reason, leaves, right? I benefit if they leave. I benefit if they leave because this extra big pool of money that I was going to give them, I'm not giving them now, right? If they leave because they die, there's a death benefit. So, I don't benefit necessarily, but the business can continue to exist. And I also am able to, a lot of times, just build up that loyalty because of how I've tied this emotionally. All right. So I had another case where we tied it to the payoff of a house. We tied it to the payoff, again, kids' college, a house payment, a roll. I was talking with somebody yesterday. You guys hung up on Rolexes. Fine. I'll buy you a Rolex, right? I'll buy you a Rolex because what I would have paid you over here, I'm just setting aside in this other pool of money. But if, people don't want to buy themselves a Rolex, they want the Rolex given to them, fine. I'm going to give you the Rolex. But here's what, we're just going to hold out, $5,000 a year of compensation. And, in 5 years, you stick around with me, guess what? You're getting a nice, maybe not a presidential, but you're getting a nice, maybe Submariner or something, right? Getting a nice watch. So again, think about when it comes to hiring, right? Or looking at your organization, most of you, if you've been in business, 2, 3, 4, 5, 10 years, right? You have somebody in there that this place wouldn't run without them. If when I just said that, somebody came to mind, give me a call so we can discuss what looks best for them. Because this does look different for every single person as to what is it that is emotionally going to make sense for them. What is it the business can afford to do? But generally there's something that is a very low cost when it comes to, increasing somebody's salary or adding on a lot of these other added benefits, but it can really instill this delayed gratification that you're doing something for somebody that they wouldn't do for themselves. Right. I've done this with trips to Iceland. I've done this with trips to, it might be that great dream vacation that they would never pay for themselves that you say, hey, I want to send you on this dream vacation. Now, you and I both know, and the other employee might know as well, that, I'm probably going to give up some raises between now and then to get this dream vacation. But when people won't spend this money on themselves and it becomes a perk of being in that organization, it is a great way to, again, retain your best people. It's a great way to attract your best people. And it's a great way to build culture, especially if you can do it to where you don't have to send your entire office to Iceland, right? Not everybody gets to go on this Alaskan cruise. So you can do these things individually, and you can do it in such a way because it's an individual contract. It is, you can pay each person individually whatever you want to pay them. And so as we kind of structure it around that, we avoid ERISA laws because we're not trying to tie this to an overall retirement plan. So hopefully that makes sense. I had slides, but they weren't that great. So, hopefully just talking to you guys through this will at least kind of spark the questions, I guess, at this point. So if you guys want to reach out, text me or email, my contact, I think, is on the invite. And let me know what your situation is. We can discuss through it, who the employee is, about how much they make, what makes you want to retain them. And real quickly back to that, a lot of times this retention is tied to just the growth of the organization. This is somebody that you want to maybe bring on as partner, but all of these things are one where the benefit is both for the employee, but for the business, but we're not giving away that equity. And especially if you're looking at, your business is your lifestyle business, but for most business owners, real quickly, I'll just kind of add this to that. For most business owners, your retirement plan is not in the stock market, right? Tesla stocks moving up and, going back up and all these things. People are excited, but you're not giving your money to Elon Musk. So what he does with his businesses has no impact on your retirement, because your retirement is tied to your business. So as you get closer to retirement, and I'm talking 10, 15 years out, within that, right? So if you're 2 years out, then we really got to be having that conversation soon. But we want to build that up, because your options of retirement, where your most likely payoff is going to be, that's going to fund the rest of your retirement, you have the options of basically 6 different options here. You can sell it to a family member, you can sell it to a third party, you can sell it to an employee, you can take your company public, you can shut it down and just be retired, or you can work till you die. Right? That's really the only options you have. And some people are like, I'm going to work till I die. Fine. But again, we've got to do something to make sure that your employees are taken care of, because your legacy is going to be tied to that. And if you die and they all lose their job, that's your legacy, right? So we have to have some kind of a contingency plan. Hopefully you have some kind of contingency plan. But of those other 4 options, especially selling it to an employee, selling it to a third party, selling it to a family member, my goal for you is to leave in one check. If you think about the different horror stories you've heard where business was running great, they turned it over to their son, they retired, the son was going to pay them, for the next 10 years, keep them on salary, whatever the arrangement was, right? But what happens to the business? Business starts to go down. People have to come out of retirement, build the business up. They're no longer retired. If we can structure your succession plan, your exit strategy to where you leave with one check, you can stay on board, you can keep some of the assets, they continue to rent the building from you, they rent the vehicles from you, whatever the structure is, right? You still have cash flow and some things coming in. But if we can structure your retirement to where you leave with a check, that is just the best way to keep the family dynamic and the good graces of those employees and all those different things that you want to see happen to your legacy of your business. All those are just better worked out if they are prepared for on the front end. So I hope this has been helpful, beneficial. Feel free to again call, text me if you have any questions. I say text, I'll just give you my number. It's 225-349-4616. I'm on the road. My kids are shooting in the state archery tournament up here in Bossier City. So I slid over to the hotel to set up and go through this. But so I won't be able to make the full length of the call. But feel free to text me, set up an appointment, and I'll be more than happy to talk to you. I also want to just conclude by saying I appreciate Amin, his office, and all that they do there for the clients. It's very important to me to have somebody that I trust that I can refer to. And the list of CPAs that I've worked with over the last 20 plus years that I trust to do right by my clients is a very short list. But Amin is right at the top of that. So I can get into long discussions of advanced tax planning strategies with Amin, and we can go back and forth for hours. But it's very few people that even understand what that conversation looks like. So I appreciate Amin. I appreciate all of his staff that he works with, Adele and the others, Jamie, and they just do a fantastic job. You guys are in great hands with your taxes. And so, let's talk some strategy.
Going to a hot spot. So,
all right, so
thank you.
Not a client, so we just called them out on the call. So,
well, you know what? There are good ones and there are bad things to say about them, right?
100%.
All right, but thank you for taking
so
over.
much.
See, it was a good thing. We're still 6 minutes ahead of schedule because we started early. So I did want to, yeah, and thank you. Look, I did want to mention to everyone, I mean, something that JP said was really, really important when we were talking about employee retention, or he was talking about employee retention. I don't know if you know this, I've told a few of you this statistic, but the Department of Labor says that when you lose a ditch digger, which is they classify as sort of the
the easiest job to fulfill, because you basically point and say dig right there. But they came up with this study, and they said when a company loses a ditch digger, it costs them $1,812 to replace that ditch digger. And there's so much involved in it that people don't think about. And the higher skilled person you have that you lose, the more it's going to cost you. So you've got to lose them, so you have no production from anybody until you actually get someone. You have to advertise for them. You have to interview people. Once you decide, you have to do background checks. You might have to engage attorneys for pay agreements and those sort of things. And so you have this situation where you spend money doing that, and then once you even get them on, then you've got to train them. There's that period, right? And you got to onboard them, and you got to do drug screens, and then and then there's a certain amount of time until they're up and running at the same efficiency level that the person who they're replacing was at. So it costs a lot of money to lose a person and bring a new person on. So very important to try to keep those people that you do have. Okay. So again, I just want to throw that in there because it was relevant, and we're about to move on to the next section. So I want to talk about tax law changes for 2023. It's going to look a little weird because my notes are actually up on this other screen instead of up on this screen. Go to the green share, and then share this one. And we're going to share that. And then how do I move to the next page though? All right, see, I told you I would be nothing without Ebony here. All right, and let me move this so I can see better. There, okay. All right, so let's talk about some tax law changes for 2023. Some very important ones, and some, not as important ones, but ones that you really need to know. So first of all, for all of the customers that are S Corp customers, now that does not necessarily mean you're an S Corp customer. That might mean that you actually have an LLC, but we've made an election to file as an S Corp. You all have heard me talk about it time and time again. Any business that's making money is typically best structured as an LLC for your legal protections and an S Corp for your tax filing. The S Corp is the most beneficial tax structure. It's not the most beneficial legal structure. Unfortunately, most people that do have actual S Corps don't have stock that they've issued. They don't sell stock if the company needs money. They don't have a board of directors. They don't do meetings. They don't do any of those normal things that you have to do. So we try to encourage people not to do an S Corp just because there are so many downfalls to it. But there are several things that you have to do with an S Corp. And one of those is to pay a reasonable salary, which again, there's no definition for that, but we can help you define that. The other one that is really the most important one is a lot of people got loans from the EIDL money. And, those were nice loans, SBA loans, having to deal, from COVID still. And instead of using that money in the business, a lot of people just took money out of the business. So there is something called a capital account, without getting too far into the accounting portion. And that basically means when you start a company, you put $1,000 into that company to start the company. And then that year you make $100,000 worth of income. Your capital account is basically worth $101,000. If you take out more than that $101,000, then you have overdrawn your capital account, and the overdraw amount that you take out is now considered taxable income. And so what's happening is we have people that got $500,000 or $1 million of EIDL loans, and their capital accounts were $150,000, but they've taken out $400,000 worth of money because they had all this money sitting in their checking account. That's a problem. And the IRS has not been following that too well, but starting last year, there's an actual form on a tax return that we have to fill out where we calculate your capital account and how much money you've invested in the business and how much money the business has made. And then we have to take out the money that you've drawn from the company. And if it's overage, you're going to be charged taxes. So, we need to really be careful with that. That money that was brought in was supposed to be used in the business to buy equipment, do additional advertising, to really be used for business reasons. And so, it's a really an issue you don't want to get into. Most people, or a lot of people, I shouldn't say most people, but a lot of people looked at it as profit, and it just is not profit. Okay. The next thing I want to talk about is commingling funds. So a little bit later, I was going to talk about the fact that the IRS received about $80 billion in funding. And so one of the things that they're going to do with a bunch of that money is to hire a whole slew, 87,000 enforcement agents. These are people that are going to come in and audit businesses and start looking at things. So some of these things that I'm talking about, the S Corp capital accounts and this one, commingling funds, is something people keep doing and doing and doing. And every year and every time I talk to people, from the first time I talked to you, everyone will remember I said, do not commingle your funds. And what that means is you use your business bank account to pay for your kid's school, or you use your business bank account to pay your mortgage, or you use your business account to just send money to another company. You don't want to do that. You need to make sure that the money you have in your account is used for business purposes. If you need money to pay your mortgage, or you need money to pay the kid's school, or whatever it is, pull the money out as a draw or distribution, depending on if you're an LLC or an S Corp, and put the money in your personal account, and then do whatever you want to do with the funds from there. Again, this is something that they're going to pay particular attention to. Now, not only does it have some tax ramifications, but it's also legal. And what I mean by that is I have First Financial of Baton Rouge, and I have another company, say the Affordable Rental Properties company that I have, and it needs money. And now I transfer money straight from First Financial to Affordable Rental Properties. Well, if Affordable Rental Properties get sued or First Financial gets sued, now an astute attorney, and I'm sure Liz is shaking her head yes to this because she's an astute attorney, will be looking for those kind of ties, because they will look at it and say, you treated the two businesses like they were the same because you use funds from one for other things in the other, and vice versa. You've commingled the funds, and now both of those companies are eligible for, or assets from those companies are eligible to be, garnished and used in those lawsuits. You want to keep those things separate, make sure it doesn't happen. And I know I saw at least one person on here that I already know only has a business account. They don't even have a personal account. So, we've been saying for years, you need a personal account, and you need a business account. And you need to keep the two separate, other than the transfers from your business into your personal to cover expenses. So please, 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 I need you to do this, because I never want to say I told you so, but I'm probably thinking it when someone calls me and says they're in trouble because they've done this and now they're looking for a way out. It's too late at that point. Okay, so let's keep those things separate and make sure. All right. One of the biggest changes that occurred this year is with the meals deduction. If you remember, Biden, and by the way, let me tell you this, we're going to talk about laws and we're going to talk about changes. Some of them are Republican things, some of them were Democratic things. I'm not playing politics, okay? I'm just talking about what's happened. So whatever your politics are, leave them to the side, okay? So the meals expense for 2021 and 2022 were changed by Biden to go to 100% for prepared meals. And what I mean by that is if you're traveling, you're at the airport and you go to the vending machine and get a soda, a candy bar, that doesn't count. These are meals, these are things that are prepared for immediate consumption. The idea was to help restaurants out since they were still struggling from COVID. So in 2021 and 2022, they made all meals 100% deductible. Starting back with January 1 of this year, those meals are going back to the way they were prior to that time frame. So let me recap these for you, because a lot of people aren't even aware of what they are. Meals are 50% deductible. Now, that's a business meal. So if I take Ebony to lunch, I can deduct 50% of that meal. If I take Ebony and John Paul to lunch, I can still deduct only 50% of that meal. I cannot deduct Ebony's portion and John's portion, only 50%. And it doesn't matter how many people you take to that lunch for that business, that business development type of meeting. Now, if you take your employees to lunch for a function and event, that's a birthday party, that's a Christmas party, Thanksgiving party, an appreciation party, something like that, those meals are 100%. If you bring in meals to the office and provide the staff, the entire staff with meals, then those meals are also 100% covered and deductible. Those are called meals for the convenience of the employer. Maybe I don't want people to take a break during tax season, so I provide them meals every day so they don't leave to go and eat lunch. They just eat here and get right back to work, okay? So again, this is something that we try to make sure that you know, because meals are one of the things that will get audited, and they are issues. If you go to McDonald's as a business owner and buy yourself some breakfast, it is not deductible. The only time owner meals are deductible is if you are more than 75 miles from home. So if you go to New Orleans for some conference and you stop at McDonald's for lunch during the break, then those meals are deductible. So keep that in mind when you're traveling, your meals are deductible as well, okay? Let's move on. Next thing, standard deduction is up for this year. The standard deduction for married couples went to $27,700, and for individuals, it has gone to $13,850. So that is important for couples as well. Think about single people though. And what I mean by this in particular is if you have an S Corp and you have children, hopefully you're paying them a salary through the company, which is deductible to the company. The child's under 18 years old. They do not have to have withholdings. They don't even have to pay FICA or Medicare, right? And that number we used to use always was around $12,000. Well, now we can go all the way up to $13,800 before they would owe any money for anything. So that's something we'll want to look at if you have children that are actually still on your payroll, okay? Corporate alternative minimum tax. We've heard some things about this. What this means basically, and I only do this because I happen to know there's one person on here that I saw that is with a company that's this big and does apply. So companies that show and have more than $1 billion a year in revenue now have to pay a minimum alternative tax, and that is 15%. And it's important because, you look at Amazon, and over the last 5 years, Amazon has made more than $1 billion in revenue, but has paid zero tax in 3 out of the 5 years. And in the other years, one year they paid 3% tax, and the other year they paid 2% tax. So this was put in place for those large companies that have been basically getting away with using loopholes and overseas accounts and those type of accounts to avoid having to pay their fair share of taxes. And when you look at it, most of us, I'm a high tax bracket, and most of my clients are a high tax bracket. So why is it fair that we're paying 20 or 30% taxes, and these very large corporations making billions of dollars are paying no tax? So this now puts a minimum tax for them for 15%. Okay. The research credit has gone up this year. It was $250,000 in the past. It's up to $500,000. We have a few customers that this applies to. I don't know about the new people. So if you have a business that does research and development type activities, it might be research on better systems, better employment systems, better computer systems, software companies, all of those companies that are doing quote unquote research to better a process or a procedure can qualify for this credit. And it is a 100% refundable credit, which is a very nice thing, okay? There is an electric vehicle tax credit as part of the green energy bill. I will tell you this though, it is very restrictive and very confusing. So if you're considering buying an electric vehicle for the tax reason, then I need you to contact me. So, you know, it can be up to $7,500 for new vehicles, up to $4,000 for used vehicles, which is new because prior to this, you could not get a credit for used vehicles. But the credit is based on several different things and it phases out as you go. So you have to, it has to be a certain size battery. It has to be, you know, your incomes are restrictive. A married couple making more than $150,000 does not qualify for it. So again, there are a lot of restrictions, very confusing, but if you're considering buying an electric vehicle, you know, shoot me a text, give me a call, and let's make sure that you qualify. Do not listen to the salesperson at the dealership because they're not going to know this tax law. All they know is, hey, you can get a tax credit, okay? Then there's the next thing is the green energy home improvement, which is another part of that clean energy bill. And that is for home improvements. So keep in mind, there are certain things you can do. So certain property items, you can get up to $600 for each of those items. So if you buy an energy efficient washer and dryer or an energy efficient refrigerator, you can qualify for up to $600. You can qualify for up to $600 for windows that are energy efficient windows. For instance, we just went ahead and renovated our back porch, basically closed it in, and we put high energy efficient windows and doors in there. The windows will qualify for up to $600 credit, and the doors qualify for up to $250 credit. You get up to $2,000 credit if you put in a electric or natural gas water heater or air conditioning unit. I see my air people are on here. Hey, Fire and Ice. Yeah, that's a little shout out. But you know, if you buy one of these, you know, electric or natural gas ACs that are energy efficient on the electric side, then those qualify for up to $2,000 credit. And then the solar panel credit was increased to $26,000 this year. And the nice thing about that is you get the credit on the federal side, which lowers your state taxes, but then there's also a separate state credit for solar as well. So make sure if any of these things are going on, any of these unique situations, you let us know when you fill out those tax organizers in TaxStone, and we'll make sure that you get your credit for those. All right. Next, healthcare premium tax credits. So we all know about the healthcare marketplace. Some of you do have the marketplace. Those credits phased out at 200% of the poverty line, meaning, you know, once you made over a certain amount, they phased out. That new level is now 400% of the poverty line. So they basically doubled the income you could have to still get those tax credits. They capped out-of-pocket expenses for Medicare as part of the health plan that passed. So if you have parents that are on Medicare, you know, they can no longer have to spend more than $2,000 in a year for medicines, doctors, procedures, everything combined. For those of you, I know one of my clients I see on there that I know has diabetes. So the plan also capped the cost of insulin at $35 per month. And if you know anything about insulin, it was ridiculously expensive. So that is something that's been changed, and I think for the better. Okay. The IRS is going to get $80 billion. I mentioned that earlier. Initially, it was supposed to be done to help the IRS deal with some of the issues. Right now, the IRS in 2022 was only able to answer 13% of the calls that came in from taxpayers. We even have a special line when we're tax preparers that we could call, and we typically, in the past, where an individual would wait an hour on hold, our wait would typically be either immediate or maybe 5 or 10 minutes at the most. Even when we call in now, Jamie, Adele, when we have a reason to call into the IRS in the morning, we dial our special number and we just leave it on hold and listen to music all day until they finally pick up. And some days we don't even get through, but so this is really supposed to help with those kind of customer service issues. They're still 10 million tax returns behind in processing from previous years and amended returns. So that's what this was supposed to be for. Unfortunately, here's what it's going to be used for. $3.1 million is going to go to taxpayer services. That's to try to help, alleviate some of that hold and some of that not being able to get through. But 3.1 billion out of 80 billion is not very much. 45.6 billion is going to enforcement agents, is to hire 87,000 enforcement agents that will be looking to start auditing returns, auditing individual businesses for things like the S-Corp filings that we talked about. So we're going to expect a lot more of that going on. $25.3 million. I don't even know what this is for. It just is for operation support. I mean, so I don't know if that means, parties to get down the stress of the people working at the IRS or what it means. But it does not mean taxpayer services for sure, because they separated. And then $4.7 billion of it is going to go to business systems automation. The system that the IRS is using dates back over 20 years. So obviously a lot has changed in that time. So we need to definitely be aware that they got this extra money and they're going to be using it for those different things. I'm going to keep on going really quickly because I think we are pulling up on a time for somebody else to talk. We have changes to the cryptocurrency law in terms of reporting. If you did any cryptocurrency sales, you need to let us know. We need to report those. The required minimum distribution from your retirement accounts is something that has been at 70 years old. Now it's been pushed up to 72 years old. Your charitable contributions were 100% for the last 2 years. They could be 100% of your income. Those have gone back down to the 60% number and will go back down to the original 50% next year, okay? Failure to implement, we're going to talk about this later, but this is a new policy that says you have to have, because of the number of computer breaches, and we know we've all gone through that recently, because of the number of computer breaches, you have to have a data privacy policy. It is a detailed one. The penalty is 5 years in jail, $100,000 fine. You can lose your licenses if you are licensed in any way, but it has to be a written information security plan. And we went to the last IRS training class last week, and they did provide us with a sample. So I'm going to be providing that to everybody after the seminar. Okay. Gift state tax has gone up to $12 million, meaning if someone dies, you can inherit up to $12,060,000 and not have to pay taxes on that money that you receive. 1099Ks. This is when you use companies like Cash App, PayPal, Venmo. The limit for them having to issue a 1099K used to be $20,000, or I'm sorry, yeah, $20,000. They have lowered it down to $600. So we need to start being really careful, make sure that you're reporting your income from your Schedule Ks. They estimate that 63% of income that comes in from those apps is not being reported, and that's something they're really going to look for. Divorced and separated parents, to claim a child, you need to have a written separation or divorce decree, and they need to live with you for more than 6 months. So if any of that's changed, let us know. The FICA limit has increased from $140,000, which it was last year, to $160,200, meaning once you make more than that, you don't have to pay any more FICA or Medicare. Okay. Louisiana extensions this year are automatic. We do not have to apply for an extension. I think what happened was so many people applied for an extension last year, they just said, we're automatically giving everybody extension. So technically your returns are due May 15th, but we're automatically extending it until November 15th, okay? And your LA tax rate is lower for families that are making more than $50,000. Don't ask me why they adjusted the tax rate lower for more than 50,000. People under 50,000, your tax rates have remained the same. And they have lowered the corporate tax franchise and income tax by 0.5%. So that also has gone down, okay? We're gonna move on to Elizabeth Gorey. She is an attorney at law. She is a corporate attorney, and she is integral in our business, and some of you have already worked with her. So if she's ready, she's going to talk about some of the general law changes that have happened that are affecting businesses.
Good morning. Can everyone hear me? Yes. Okay, I'm going with yes in my heart. Good morning. Thank you, Amin, for having me. I really appreciate it. My name is Elizabeth Gorey. Okay, perfect. I'm Elizabeth Gorey, and several legal/HR updates that you should be aware of. There were so many that I had to whittle it down to some of the ones that I felt would be most important for all of your businesses. So the first thing that I want to talk about is the Pregnant Workers Fairness Act. Now, before the Pregnant Workers Fairness Act, if you had an employee who was pregnant, she really only had one or two solutions. It would either fall under the Family Medical Leave Act, we know that as FMLA, that was passed back in 1993, or the Americans with Disabilities Act. Well, this law was actually introduced back in 2012, and Congress played around with it for years, and it actually stalled until December of 2022 in the Senate. And so now it is an actual thing. And if you are an employer and you have at least 15 employees, and I want to stop right there and just make sure you guys understand what an employee is. It's not 15 independent contractors, people that complete W-9s and get 1099s as opposed to W-2s in January. These are 15 actual employees. Then the Pregnancy Workers Fairness Act is applicable to you. And not only to your 15 or more employees, but to applicants who are applying for positions as employees. And what the law says is you're required to make reasonable accommodations that do not impose undue hardship on the employer. Now, you might be wondering, what is reasonable accommodation? Listen, I know many of you know lawyers. We have been wondering what reasonable meant since law school. We don't know, but there is a test for it. And what I'm going to ask you guys to do is, and I'm almost scared to say this phrase, but we have to employ some common sense. And so reasonable accommodations, in my mind, would mirror those of the ADA. For example, you don't want to stop an employee who's pregnant, who's let you know that they're pregnant, from taking breaks to go to the restroom, right? We don't want to be nickel and diming and clocking them every time they go to the restroom or get water or things of that nature. I would see that as a reasonable accommodation. If someone indicated maybe they needed a chair pillow and need to stand up and stretch from time to time or prop their legs up, that would be a reasonable accommodation. And undue hardship on the employer has typically been tested with the ADA as something that would require the employer to completely redo that employee's job. In other words, if you have to build out a whole separate office and incur lots of expenses and disruptions for the business, that could qualify as undue hardship. Where I'll leave you with this is, if you have employees that have come to you and said, hey, I'm pregnant, and you don't know what a reasonable accommodation looks like, speak to your HR professional, speak to your general counsel, reach out to me, we'll help you out with that. So that's the Pregnant Workers Fairness Act. The next one that I wanted to discuss is the Louisiana Hair Discrimination Act, and it's actually known as the Crown Act. And the Crown Act is listed under House Bill 1083. That bill ultimately says that if you are an employer, you cannot discriminate workers or people that want to work with you based on the texture of their hair. Now, we're not going to go into the long drawn out history, but we're all intelligent people on the call. And we know that for years and years and years, this has been an open practice geared toward discriminating a certain group of people. So today I stand before you with my big hair, reminding you that you cannot discriminate against someone who has cultural hairstyles. And they define it as people with afros, dreadlocks, twists, locks, braids, cornrow braids, bantu knots, curls, and hairstyle to protect their hair texture for cultural significance. Now, here's the caveat to that. Let's say you're an employer in food service. That doesn't mean it's a free-for-all and you can come in there with your afro unprotected and get little afro pieces in the French fries. So you can still make sure that you put laws or rules together, internal rules together to protect the health, safety, and welfare of your customers and your brand and your product. The law is just saying you can't turn someone down who's qualified for positions simply because you don't like their hair. Okay, the next one that I want to talk about, and while it's not necessarily a thing in Louisiana yet, as we know, once laws typically pass in some states and they kind of take over like a wildfire, eventually they will affect us. And so I want to talk about pay transparency. It's something my friends and I have talked about quite a bit. You see jobs posted, for example, like on Indeed, and they don't tell you what the pay is. That's frustrating because maybe if you knew what the pay was, you either would or would not apply. In certain states like Oregon, New York, California, and Washington state, laws have already passed indicating that you have to post what those wages would be on your advertisements. I believe that it is a good practice across the board anyway. Why even waste time? So again, while it's not applicable in Louisiana, I believe that it will likely come. It's definitely foreseeable. So it's a practice that we may want to look at a little bit more closely, just so that we don't waste time and that we're already in compliance when it comes. Last year, we talked about the FLSA. So FLSA is the Fair Labor Standards Act. They are a division of the Department of Labor. They're the people that's going to come knocking on your doors if you have employees that file claims indicating that you have not paid them for overtime. And that's just a tiny piece of it. You guys, I was looking up some articles just this morning to figure out what sort of penalties employers have been faced with when they're not paying back wages, when they're not paying the proper overtime rate. You guys, I looked at one particular case in Louisiana where employers last year paid $714,000 out to a group of nurses who they were paying straight time to. In case anyone doesn't know, if you have employees, I'm not talking about contractors, but employees, you have to pay them time and a half in Louisiana if they work 1 minute over 40 hours, which means if they're making a certain rate for 40 hours regular time, once they go to 40 hours and 1 minute, that 1 minute is paid at time and a half. Please don't play with this, you guys, because there are severe penalties for back wages. Some of those penalties include interest. So the federal government will tack on some interest for all the money that that person would have made. There are court costs, there are legal fees. You'd be responsible for paying for that former employee's legal bills, and there are now criminal penalties that can come with that as well, not to mention the negative press. The last thing that I wanted to talk about was Act 701. Act 701 is kind of a broad act that some of us may be familiar with. I think a lot of us know that your driver's license can be suspended if you fail to pay child support, as well as things like your wildlife and fishery license. Some of those um, leisure licenses can be suspended if you fail to pay things like child support. Well, Louisiana says if you fail to pay state taxes now, your license, your driver's license can now be suspended under that act. And it can be found at revised statute 32:404. So that's Louisiana Revised Statute :32404. It outlines the penalties whereby your driver's license can be suspended anywhere from 6 months to 15 months. And then, as you guys know, once you're driving without a driver's license, that opens up a whole other can of worms. And then you'll need a criminal defense attorney. Cue me again. So, just to reiterate, we talked about the Louisiana Hair Discrimination Act, the Crown Act, that says you cannot discriminate against someone who's qualified for the position just because they have ethnic, natural, protective, or cultural hairstyles. You must provide, if you have employees 15 or more, you have to honor the Pregnant Workers Fairness Act. And let me actually just add a sub bullet to that I didn't cover. There are laws in place now that indicate you have to provide breaks in dedicated facilities for nursing mothers. That is something that's near and dear to me because in 2021, I actually was part of the group, part of the Louisiana State Bar Association group that helped to pass that particular law. Courts now have to make sure that a nursing mother is able to go into some little area to nurse their baby. You have to provide that at your place of employment also. That does not mean you have to go out and create a whole separate office, but if audited, you need to be able to show this is the special place for mothers who are nursing to be able to take a break and pump or actually nurse their baby if they are allowed to bring their baby to work. So we've covered the Pregnant Workers Fairness Act, which says you have to make reasonable accommodation for your employees who indicate that they're pregnant. We know that we have to pay overtime, and you don't want to get in trouble with the Fair Labor Standards Act because there are severe penalties. We know that pay transparency is coming down the pipe, so it's a good practice to go ahead and list how much you're going to pay people on your ads. And I'm going to also just add that there have been several minimum wage increases in places like Florida, Oregon, New Jersey, and New York, likely going to come down the pipe to Louisiana. And Act 701 says driver's licenses can be suspended for failing to pay state taxes. I'm going to add one little tiny thing. I don't know if Amin mentioned it before I got started. It's a tax situation as well as kind of an HR situation. The mileage rate is up 4 cents. It's now 62.5 cents per mile. That's important because in my firm, we actually pay for mileage. So if we have people that have to go to a court outside of our general area, we pay them for their mileage. So again, this is up 4 cents. You want to make sure you're in compliance about that. And again, that new mileage rate is 62.5 cents per mile. Again, you guys, I'm Elizabeth Gorey, attorney at law. Are there any questions that I can answer for you? Have I mentioned anything that doesn't feel clear to you? Well, I'll take that as everyone's all clear. I'll go ahead and put my contact information in the chat box. As always, it's been a real pleasure. And if you don't understand something, if there's something you don't know, always err on the side of caution. We're here to help you out, okay? Thank you.
I did. Okay. Can everybody hear me now? Elizabeth, shake your head if you can hear me. Okay, I got you. All right, great. And it's funny because I kind of rushed through those tax things because my written notes had the wrong times on them and Ebony corrected them for the real thing. So I thought I was behind, I wasn't behind, but we'll be able to come back to Liz if there are any other questions as we go. And there are also probably some additional laws that we didn't really have time to mention. So we're going to turn those into written format and make sure that everybody signs up. We're going to send a follow-up email after the Zoom is over with our link for YouTube, so that we will post this on there for the people who weren't able to be on here. And we will also post some additional information that has to do with the rest of these laws and kind of some of the things that I've rushed through when we were talking about the healthcare premiums. Okay, but again, very important to make sure that we're complying with all of these different laws. And that way we do not get ourselves in trouble, because over and over, I tell business owners, you know, there are a couple of ways you can make money. You can sell more or you can spend less, because if you sell more, you might be a 10 or 20% profit margin, in which case you can only, you know, if you put $100,000 on the books, you will only make $10,000 in your own pocket. But if you have $100,000 legal settlement that you have to pay, you have to do $1 million in business to make that $100,000 back. So it's always better to err on the side of caution. And Liz specializes in HR. So, you know, any questions that you have, either send them straight to her, or you're welcome to, you know, obviously contact us. Okay. I do want to go back before Patrice gets on. And there is one that I really want to mention, that if you remember, I mentioned that failure to implement Data Privacy Act. Last year, the data breaches were down significantly from the year before. In 2021, worldwide, there were 959 million data breaches, and they're down. Last year, there were only 310 million data breaches. 23.5 million of those were in the United States. T-Mobile just announced that they had a data breach in November that they hadn't told anyone about, and their 37 million subscribers, names, addresses, emails, and date of births were all stolen. So this can happen very easily. It happened to the hospitals around here. It happened to the DMV. We need to be really, really careful about this stuff. If you don't have some kind of credit monitoring service, most credit cards offer that. Capital One, sign up online for their, it's called Credit. I've used it, I don't even remember the name of it, but it is their CreditWise, and that's free if you have any Capital One card. Chase cards come with it. Make sure that you sign up for these things, that you know if anything is changing with your credit, because the dark web is there, it exists, and there is money in stolen information. So please make sure that you're being very careful about that. I wanted to go back and touch on the cryptocurrency thing that I mentioned. As of 2 years ago, they required us to start answering a question, which we've asked you all. Have you bought, traded, sold, or dealt in cryptocurrency? And we've had to answer yes or no. So it looks like this new law is going to change, is going to actually go into effect. That is going to require companies like Coinbase and not Robinhood. Robinhood typically did, but some of the other ones that did not, and that deals pretty much exclusively in cryptocurrency, to report that you did buy and sell cryptocurrency. And the worst part about it is that they're going to be required to do that for the current year and 3 years prior. So, you know, if you answered no to that and you really did, you can be in trouble. So we want to make sure that you are not in that situation. Okay. I am going to share this screen and move on. And I'm going to bring in Patrice. She's actually going to jump in my computer because our internet went out at home as well. So I'm gonna get up and move and let her come sit in my spot.
But I can go and get a little bit started. I think this is my third year of doing this with him for me. And the first year he asked me, I think we were just coming into COVID, if I'm not mistaken. And I talked a lot about, some self-care, how to take care of you and your staff. And then the last year we spoke about, I keep saying we, it was still kind of about self-care, but it was more of, now we have, we're kind of playing catch up, checking in with you guys and make sure everybody was good. So this year I wanted to talk about what coaching really is, because I jumped into coaching, telling you guys all this great stuff, but really didn't explain what coaching was. So for this particular talk, I decided, well, let me give a little background of what coaching is. So I decided to, find a good definition, and there's many coaches as there are ideas out there. There are weight loss coaches, there are mommy coaches. When I say that, it could be another mom that gives other moms tips and how to manage a house, with kids in it. There are spiritual coaches. There's a ton of coaches. But when I was looking for a good definition for this particular talk, I found a really good one through MIT, and it was MIT Human Resources. So I'm just really going to read what that meant, what their definition was, and then I'll go into stuff about how you could use a coach in your, in your company, or you might want to use a coach yourself. So per MIT Human Resources, coaching is a means for developing a partnership between the manager and employee that creates a shared understanding about what needs to be achieved and how it is to be achieved. Coaching, defined as an ongoing approach to managing people, creates a genuinely motivating climate for performance, improves the match between an employee's actual and expected outcome performance, increases the probability of an employee's success by providing timely feedback, recognition, let me say that word again, recognition, clarity, and support. There are several basic assumptions for successful coaching. Employees want to succeed at work. Employees can contribute ideas on how work should be performed. I know a lot of people won't agree with that, but it's really nice sometimes to be able to give input to an employer and they at least mull it over. Employers will work hard to achieve goals that they've played a role in developing. And employers are more open to learning if they recognize the value to them in terms of improved success on the job and subsequent reward, and again, recognition. Okay. There are several roles in coaching. I mean, there's many roles, but as far as MIT and their human resources goes, these are more aligned with in-house coaching. A lot of companies have in-house coaches, believe it or not. I would not be an in-house coach. I am external. You call me to come in, but a lot of people have coaches on staff. And I'll mention that at the end about some of the companies and celebrities that use coaches regularly. So the role of coaching, providing direction, articulating the company's goals, very, very, very important, and values in a clear and concise manner. The clearer the company goals, the easier it is for an employee to translate them into their own individual goals. Don't have people thinking they don't have their own agendas. We come into a job, we want to either move up, we want to learn something. So we got to make sure your company goals and values are aligned with the employees you're hiring. Improving performance. The manager is responsible for creating a learning environment where employees are supporting their efforts to continuously improve. And a coach can help this by assessing the employee's current capabilities, providing feedback to the company or the manager, not telling all their business, but providing some feedback. And then that manager is also the coach can help that manager create opportunities to fill in the gap for whatever learning or skills-based needs that employee may need to get better in the company. Opening up possibilities. Develop capabilities of the employee to solve problems or make decisions. And a coach can also be a resource for removing obstacles. The coach may take an active role in helping the employee confront people. When I say confront, I don't mean, get up all in their face and we have a whole issue, you got to call the cops and blah, blah. No, intelligent confronting or, discussing with someone about what's going on, what they're facing. Or other times it may be a sounding board to help the employee develop their own strategies to overcome these obstacles that don't even need to have anybody else involved. It could be something internal. So with that, that's what coaching really is, y'all. It's making something better, improving a situation, helping you think or strategize better, because we get into this rush all day and we keep doing things like we've always done it that way, or, the last person did, we've always done it this way. Well, times have changed. I mean, COVID showed you that right now with Cox going out, we had to pivot, but coaching is about improvement, and what you want now is to take care of the core people you have in your company, because what COVID did do was take a lot of people out of their jobs. We're talking nurses, doctors. You see where you drive up to Chick-fil-A and they'll have a big sign, $13, $14 an hour to serve chicken. Don't get me started. But, people they have this mass exodus, they're changing jobs. They're opening their own companies. They're realizing, hey, I can do something else. So you have to take care of what you got. Whether it's your household, whether it's your business, whether your finances, you got to take care of what you got. We got to make it better, and to make sure you can keep delivering whatever it is you're delivering. Okay. So when you think about coaching and who you want to send to coaching, whether it's yourself, and I highly advise you bosses get some coaching too. None of us are perfect. We can always improve. You're always asking your employees to do more, and improve. Well, guess what? You need to do it too. But people think, well, I'm going to send, Steve or Joe or Janice or Darla because they're, they're on the fence about leaving, and I want to keep them, or, I don't know if I do really want to keep them, but I don't know. I'm sending them coaching and see what's going on. No. Don't do that. Don't do that. MIT actually calls these people problem employees, which we all do. And they go on to say that sometimes a problem the employee has is the employee is someone who's left out of the process when a resolution to a problem is being developed. Okay, that performance management coaching calls for swift, clear, and concrete identification of the performance or the behavior and a joint resolution of the problem. Okay, that's great. I know in some companies, you may have a few, employees that are upset because there were some things going on, some changes, and they weren't involved. That's great. That's what they consider problem employees. But I got a feeling most of you on this call, that ain't what your problem employees are. And if that's the case, don't try to keep them. Don't let them roll out. And don't send them to coaching, because you're wasting your money. Because if coaching is about making things better, making people better, making you feel better, making you strategize better, at some point, they're going to look up and go, wait a minute. I've been sitting here with you for like 2, 3, 4 weeks. We've been pulling out all this stuff. That's if they're going to work. You got to work the program, as they say. They're going to come in and start thinking, well, I don't like this about my job. I don't like this about my manager. I don't like this about the person that I'm sitting next to in the cubicle. I don't like the clients we serve. I don't really like my job. They're going to start telling me all the cons and pros and cons. And they may realize they got more cons with your job than pros. And they're ready to roll. Let them roll. Okay. I know you've heard Amin say this 1,000 times. And if you're new to him, you are going to hear it at some point. And I'm going to say it right now. But a couple years ago, we were getting ready to go to church. And we were watching TD Jakes before we went to church. So if that's any indication about how this world is, we needed a double dose of Jesus to get the day started, to get the week started. But the episode was about TD Jakes talking about letting things go. And he said, often a member will come to him and say, Bishop, I'm thinking about leaving. I'm ready to leave the church. And so often he said he would try to talk him out of it. He would do everything he could. He'd go home worried about it. Talk to his wife. He talked to other people, in the church. What can I do to keep him or her? He said, but then he realized when those people stay, they start to poison everything else around them. You know, they start taking everything down. The morale's going down. They're complaining. And you know them. They're the same people at the potluck. They're complaining. They're complaining about the Christmas dinner, the Christmas business function, why we had to have it here. Why couldn't we have it somewhere else? You know, they're going to cubicle to cubicle or call to call. They're dragging coming in. Let them go. So what TD said is he doesn't do that anymore. He lets them go. He said, look, I'll pack your bags for you. I'll pack your office up. I'll drive you to the airport. What you need me to do to make your transition out of here smoother, let them go. You know, when you think about it, they're not your kids, right? And I know it's hard replacing people. I mean, put some ads in the paper for different things and you'd be surprised at the low number of people applying for professional level jobs. Someone last night saying, you know, nobody wants to work. They want the money, but they don't want to work. Well, you think about letting them go, they're not your kids. We let our kids go, don't we? We groom them up, let them go. And they say, Mom, Dad, I want to go. It's like, I love you, bye. You know, you're ready to get them out your pockets. So get this employee out of your pocket, get somebody in that's, you know, that's going to really work. So just about let them go, let them go. Another person that you don't send to coaching is a new hire. Again, well, that's the perfect person to send. No, it's not. They're on probation. What, 3, 6, however many months your company, you know, says they're going to be on probation. Y'all don't even know if you like each other yet. It's like dating somebody new. You ain't taking them home to mama that first week. You don't know if y'all gonna be together in 2 weeks. Don't send them. You're wasting money. And I'm gonna say it. I mean, it'll tell me. They don't have to say how much it costs. I'm not gonna say how much it costs, but I ain't cheap. You know, I'm not gonna just take your money. I'll call and say, you know, this person isn't really working out. Do you really want them to come? Yeah. Okay. Don't get mad at the coach if they leave. And I can't tell you, or we can't tell you every single thing we've talked about. It's personal. Coaching is personal. Now, coaching is definitely, absolutely not therapy. Do not get that mixed up. I'm not a psychologist, a psychiatrist. I'm not a social worker. I'm not a licensed professional counselor. I am a registered nurse with a psych background. And yes, the things I've learned then carry me forward, always. You know, if I'm coaching someone and I see something is more medical, and that's not the role I'm in, then I will gladly refer you out. I have a network of people I can refer out, okay? But when we're talking about, you know, I've said who not to send to coaching. Who send to coaching? Send someone or people or your team, send the person that they like their job. They want to learn more. They want to be better. Maybe you have a team and you guys are going to come on this new project and you're like, how to get everybody's head right. You know, football teams do it all the time. They're playing this new team, you know, they're going to band together, get that extra bit of coaching in so they can make sure that this new team they're taking on, they can whip their butts. You know, ain't what I want to say, but you know, they can whip their butts. The person that is really good and they're having a little bit of trouble right now at work. And that could be simple as maybe a new medical diagnosis, or, you know, we call them situational stressors. That's new things that are coming to your life now. That's a situational, it's not there forever, but maybe a new baby. Well, that can lead to a long-term situation, stressful situation. My 31 she's still a little stressful sometimes. But, you know, the new baby, a new job, wife got a new job, or husband got a new job, kids are going to college, empty nesters are thinking about retirement, they got a new house. This is situational stuff. It'll settle down at some point. So, you know, you might want to send the coach in to say, hey, let's go talk to Tracy or so-and-so, and let's just give you a few weeks in there, you know, a few sessions to see what's going on. And usually it can be resolved, you know. Like I said, but the team, you have a new project coming up and you want to get everybody on board. You want to see where their head's at. You want to make sure they're cohesive enough to do this project because it's a gazillion-dollar project and you want to make sure it's right. Then those people are coaching, you know. But coaching is very beneficial. Like I said, there's a coach for anything you can think of. For me, I'm employee improvement or development executive, and I work with kids 16 to 21 years old, getting them from that transition from high school to adulthood. Mom and dads don't have a whole lot of time to do the little nitpicky stuff that our parents probably did with us. And you can tell when we're talking about millennials, Gen X, Gen Z, and they got something new now. I can't keep up with them. I call some of them headaches, but hey, that's just me. You know, I'm an old head. But coaching can be really effective, but it has to be done in a way that there's psychological trust between the coach and the person we're coaching. And when I say psychological trust, that means they have to feel safe when they come to us. They have to be able to open up knowing I can tell Patrice or Corey or Angela or whoever what's going on at work without them having to run back to my boss. Okay. Not that they're saying anything bad if you're sending the right person, but it's just some things they want to get off the chest that they may not feel comfortable telling you, because sometimes when you tell a boss or somebody at work, they'll tell somebody else, and all the business out in the streets. And then the boss is mad because if you keep repeating things and saying things, by the time it comes out of your mouth into that 10th person, it's a whole different story. Okay. A lot of people think that coaching is not, it's not a big deal. It's not something that it's just fluff, but psychiatry was fluff too, way back in the day. And now we're talking about mental health all the time. It's very important. I've always said your mental health is your physical health. You can have high blood pressure, diabetes, be overweight, be too thin. But if your mental health is off, all that goes by the way too. Depression, you're not bathing, you're not eating, you're not talking to people, you're agitated, you're aggravated. So your mental health is extremely important. I know coaching is not therapy. It can give you an outlet to kind of sit and take all those jumbled up things in your brain and kind of, streamline them. I think I've said that before, but that's the thing, that ball of yarn is what you have going on in your head. You take that one little piece and you unravel it. And that's what we like to do with coaching. Now, so I was going to mention some companies that use coaches and some celebrities. And if you're thinking coaching, like I said, it's a fad or a waste of time, between 25 and 40% of Fortune 500 companies use coaches. And that in 2022, coaching was estimated to be a $22 billion industry and growing. Okay. Can anybody coach? Absolutely. Would I go to anybody to coach me? Absolutely not. A little niece asked me a couple years ago, she goes, what about this coaching? I said, what are you an expert at? She said, I think she was 21 or 2 at the time. She goes, yeah, I'm gonna come back to you on that. I said, come back to me when you're about 30, 35. Doesn't mean she can't coach, but it's something that you're confident at, something you're competent at, something you're an expert at. I've been a nurse almost 30 years. I think I'm confident enough to do some coaching. Amin's been doing this for, oh God, since he was, I'm gonna say a kid, but 20 something years old. We're grandparents now. I think he's more than capable of being a business coach. But some of the companies that use coaches, ExxonMobil, there's a list of executive coaches they can pull from. Don't get it twisted. Target, Ford, Apple, Microsoft, Google, celebrities that use coaches. Now, I was told this person was the coach of coaches. Oprah uses a coach. You believe that? The woman that tells you she uses a coach. She has a sounding board. Leonardo DiCaprio, the late Steve Jobs. I'm going to say his name wrong. I've been saying it wrong since forever, but Cristiano Ronaldo, the soccer player. Bill Gates, Jeff Bezos. I wonder if Jeff Bezos takes his coach on his yacht he just built. But anyway, but these are just some of the few people that use it. And I was really, really thought it was really cool that Metallica, the group Metallica, now some of y'all who are not our age might not know who Metallica is, but they used a team coach because they were always working together and they had so many different ideas. They needed somebody in that middle of that team to help them pull all this stuff in and to get them focused to be on that one goal together, not have them all, you know how artists are, they're all over the place. So imagine being a rock band or some kind of group that needed coaches. But this is just how important coaches can be. I don't say, call me, call somebody else. I might not be the perfect fit for you, but I'll try. Okay. So with that, you guys have a great rest of your weekend. It's raining outside. Be careful. Call me if you need me. Amin has my number. But I will say, I think next year I'll change the format. I'll leave it open for you guys to submit some things that you want me to cover next year. How about that? How about we turn this over to you, make it more interactive? I like interactive. I like interaction when I'm talking. You see my hands moving, I'm pacing. I like my brain's moving. So you guys come up with some things you want me to cover next year. Okay. Have a good weekend. Peace and light.
Okay, we're swapping up again, and let me go ahead and make sure that we are shared. Are we still shared on this? It's just a camera. Okay, y'all hold on one second. You know, I'm not as fast and fancy as she is. Actually, you know what? I'm gonna leave it on the camera for a second and then I'll share Stephen's screen. We're a few minutes ahead, but there were a couple of things that came up while she was talking that really made me want to comment. And you know, I like to use my company, you know, as an example, because these things are real. These things, you know, happen in all companies. And, you know, I often said, I don't advertise because when I put an ad out there, nobody thinks they need business advice. I mean, everybody thinks they know everything. They think they're, you know, the cream of the crop and that nobody can contribute anything to their business. And I want to, you know, there's a couple things I'll say about that. First is, you know, if most of you are my clients, I know some of you are not, but most of you are my clients. Our people don't leave. I mean, we have very little turnover. When Teresa mentioned I was, you know, advertising, I was having trouble I was trying to hire another CPA. I wasn't trying to, you know, replace somebody. And I had trouble doing that because, you know, people aren't as available as they were, right? But I don't typically have people leave. Last year, we had somebody that did leave, first person to leave in years and years. And, you know, it's funny because we went to, you know, I try to do stuff for the people. So we decided one day, because we had a stressful kind of month, I said, you know what, we're all gonna go out to lunch. And we got a room at Superior Grill. And we were there, and one of the people was just complaining, why'd we come here? I mean, we could have went somewhere else. I mean, and I'm going, you're getting a free meal and drinks. You need to be happy and shut up. But you know what? You know, I obviously didn't say that, but that's what I was kind of thinking. Well, that same person came to me about a month later saying, well, you know, I think that, you know, I need to get a raise and I need to do this and that and the other thing. And I said, or I'm going to go back to my old job of hot shotting cars. And I said, bye. I mean, that TD Jakes was in my head when he said, let people go. And the funny thing is, I can't tell you the next week how many people came and said, oh my God, the air's so much lighter around here. We didn't even realize how much it was bringing the environment down. Let these people go. You know, when I was in the car business, I mean, you know, I think I was really integral to the car group I was working for. And, you know, Patrice said it one time when we were on vacation. She said, don't get it twisted. If you leave tomorrow, that group of car dealerships is still going to be there. And it's true. People think I can't let somebody go because they're too important to the business. Sorry, but you as an owner are the most important person in the business. And sometimes you can even be replaced, right? But don't ever get to the point where you're letting somebody hold you hostage because you feel like you have to have that person. I know I talked about the cost of turnover, but the cost of leaving a toxic person in your organization is even higher, okay? The second thing is realize your own strengths and weaknesses. You know, Tracy mentioned some, you know, some of her people that she coaches are employees, and some of the people she coaches are business owners. We all have to have that outside other voice that's kind of directing our path. And, you know, in this business, I'm hearing every day, day to day. If you ask any one of my employees, they know, don't go to Amin if you're having a problem with your girlfriend or your boyfriend or your husband and your wife, because I'm gonna tell you, get another one. I mean, I don't know. I don't know what else to say. I'm not really built to handle that kind of stuff. Those kind of issues, they go to Patrice and talk to her. If if you're trying to buy a house and you need to get your credit lined up, and you know, my employees have to get the credit lined up or do something, hey, come to me, I'm your man. I will help you out with that. But you know your strengths and weaknesses, and especially in businesses with partnerships, know who's better at handling what type of situations, these internal employee issues. Don't be afraid to turn to outside professionals. So I had this conversation yesterday. We are in a process. There's a company that has several locations, and one of the locations is owned jointly by two people, and the other ones are owned by the other person. and the kids and grandkids are all involved in the business. And I mean, they're doing the things that they're not supposed to do. And this came out in this meeting when I was like, look, if you want to buy out your partner, we have to do this right. You need to do a buy-sell agreement. We need to figure out, how the transition is going to occur. Stuff has to be in writing, in paper. And they said, well, he can work with the manager, the person that's going to come in and run that location for us. And I said, okay, so where's the training manual? No training manual, no job descriptions, no anything to help them make this transition. And look, y'all, I'm not gonna say how old they are because you might guess who they are, but I can tell you this, they're older than 50 years old as a company, and they don't have anything in place that they should have in place. You know why? They're too cheap to do it. They won't pay the money and they don't realize it, I mentioned to them, there are so many tax savings they could be doing. I'm talking about upwards of hundreds of thousands of dollars a year in taxes that they could save. And they were like, well, we want to do those. I'm like, I kept saying we need to have some sessions to get together and start organizing this and putting some things in place. But it's been 8 years and you still haven't done it. So for 8 years, you're leaving all this money on the table because you will not, I have to pull teeth from you to get you to pay me for one of my sessions I do with you. You have to spend money in business. These Fortune 500 companies, they remain Fortune 500 companies because they spend money on coaches. They spend money on people like me to come in and evaluate their business and figure out what's going on with it and where their shortfalls are. But we're so tied up in, I don't want to spend money. I can tell you, there's a CPA, a buddy of mine that graduated with me from undergrad, and then he went to Yale, and he's in Pennsylvania. And every year I get him to review my financials. I talk to him about the business and what's going on, and he gives me advice as to what things I need to change. We get tunnel visions as owners. We don't see the truth because we're too busy looking at the picture the way we want to look at it. And for those of you that don't know the rules or have never heard me told this rule, this joke about an employer is very simple. There's a boat captain riding at night. It's foggy. They see an oncoming light. The radio operator gets on and says, hey, we are, in a path with you. Would you please move? And the other voice comes back and says, well, you're on a course with us. Would you please move? The captain gets really mad and he says, this is Captain Winstead of the USS Navy. You need to move. And the other voice comes back and says, well, sir, this is Ensign Brown with the USS Navy, and I really think you should move. With this, the captain gets so mad that this lowly ensign is telling him what to do. He gets back on the mic and he barks in there and he says, damn it, we are a USS destroyer, move now. And the other voice comes back and says, we're a lighthouse. And what happened to that captain's voice? I mean, or his opinion of what was going on. He got a new piece of information. All he knew is he's got this big boat that he's in command of. He's got these operating systems, and he's higher ranked than this person trying to tell him what to do. But he got one more piece of information that helped him have a paradigm shift. And that's what outside people do for you. I know a lot about the law. I'm a notary public. I can write agreements and contracts and wills and power of attorneys. Why do I have Liz around? It's simple. I'm not an attorney. And besides that, I don't see everything the same way she sees everything. So please get somebody else involved. Coaching is a great aspect. Again, when I mentioned the change in this business with Pam and Jamie becoming partners, I want them to handle more of the day-to-day, and I want to do more of that business coaching for you. I want to help you develop your businesses and determine where things are and where they can go, because that's why we're in business. And if you're not in business for that reason, go work for somebody and make a salary, do your 40 hours and go home, because that's really where we are. Okay, so I'm going to share the screen now. We are still 10 minutes ahead, and I'm going to. Oh, so yeah. Oh, that's right. So let me stop sharing this because I'm going to turn this over to Stephen Bayham. Stephen is with Bayham Laboratories. We have an in-house computer person, and we had that issue with the people trying to get a ransom from us. And Steven's the expert I called. And guess what? I knew it was going to cost me money, but you know what? He's saving me money in the fact that he's protecting all of our clients for us, and and we're going to make sure their information is safe. So.
All right, well, good morning, everybody. Like you said, I'm Steve Baham. I'm not going to go too much detail into my history. Just know that I've been doing technology I probably had an email address before most of you. I think I got my email address set up in 1989. But even with that, I've been working with several businesses in Louisiana over the past close to 25 years. And one of my particular things that I've been focused on, especially since I had a very good internship with the Navy, learning Department of Defense security on computer systems. I've been working a lot with businesses to make sure they are also secure. So we're going to do a quick abbreviated version of cybersecurity basics and what you should have in place at your office. This can be for small business, medium business, even large business, and nonprofits. I know a lot of people say, oh, nonprofits, we don't have any money for anything, but you need to have things in place to protect you. So I'm going to be swapping back and forth from both the video of me and our slideshow. So here we are. We're going to do cybersecurity basics. And again, this is an abbreviated version. We have a longer version if you feel like your office needs some more detail. Okay, so we have a couple topics we want to cover quickly. What should you have in place at your organization? We're going to go over some common things, especially for this time period we live in recognizing scams and phishing, and then what to do if you're hacked or in a ransomware attack. And then I'll go over some options as well. So the first thing we want to go over is what should you already have in place? So you should already have in place an information technology department, a professional on staff or a subcontractor standing at the ready for when you need something. You should have regular cybersecurity training sessions with your staff. And I know some people may think, oh, well, isn't that the responsibility of the IT department? Yes, but also a lot of our infiltrations come from staff interaction with digital technology. A lot of times if we put protections in place, nothing would happen and everything would be very safe if nobody touched it. But that's not the case. We interact with technology now. Make sure you have data backup policies and actions. Make sure you have your office server storage, your on-site and your off-site backups. On-site could be a backup you make regularly. Off-site can be your cloud backup. Make sure you have updated antivirus software, not the software that is expired for 6 months and it's just sitting there warning you that it's been expired and you might need to renew it. Make sure you have updated antivirus software. Make sure you're updating your software patches, those Windows updates and Macintosh updates that come through and says, hey, it's time to install an update. It's time to run this through. And you say, no, I don't want to do it right now. No, those are important. Those are patches that protect you from hacks and security breaches. And lastly, make sure you have a business grade firewall and Wi-Fi security that is current. I go into a lot of businesses and first thing I look around when I see is an old firewall from 10 years ago, 15 years ago. those aren't going to work. It's time to keep those things current. Now, I ran through these things, and I know you probably have the same expression that some people have. They're not ready. Is it time to panic yet? I don't have any of that stuff. Okay, well, we're going to run through a few things that you probably need to do to get things situated and organized for your technology. Okay, why do I need an IT professional? A lot of businesses will think that they can do everything on their own. They've seen the tutorials, they've seen the YouTube videos. It's all easy to set up, right? Well, experience helps, and having some training and schooling on the subject also helps. The IT professional is going to coordinate information technology, security, cybersecurity policies for your office. They're keeping those things up to date. They live and breathe it all the time. So they're going to know what's out there and how to protect you. They're going to help you track equipment and upgrade timelines. I'll get into that a little bit more in detail in a little bit, but your timeline to upgrade should be, you should be aware of when it's time to upgrade things. They're going to help you, of course, troubleshoot issues that you run across. Respond quickly in an emergency situation. You do not want to be in a situation where you can't get in touch with your cousin who knows a little bit about IT when your office has an outage. You don't want to be in that situation. You're losing time, you're losing money while you're waiting on your friend, your cousin, or standing in line at Best Buy. You don't want that situation. And you want to have regular advice from your IT professional as you go, because your IT professional who's working with your office is going to observe how people work, what they're interacting with, what software they're using, how they're trying to do things, and what they may be trying to do that they don't realize is an easier way to do. And of course, this will allow your organization to do what it needs to do, work, and do what you guys specialize in. If you specialize in selling puppies, you're not going to be the person who's concentrating on if your antivirus has the latest update for the latest ransomware that's going rampant. You're going to concentrate on selling puppies. If you're financial, you want to concentrate on that. If you're construction, you want to concentrate on building that next building and preparing those plans. You don't want to have to focus on the vast amount of information that comes through the pipeline through IT professional databases and references. When I wake up in the morning, the first thing I do is check the IT news. Before any other news, I'm checking the IT news, because I need to know what happened, who got hacked, what is out there, what viruses are new. I need to know all of that so that I'm prepared to present that to my clients. And of course, if you're still using one of these, there's a problem. This is in case you don't know, this is a 1999 computer system. And some people will push their company to still run off of something. And I'm gonna tell you right now, you have gotten your money's worth out of it already. Okay, so this is one quick thing I wanted to include. And of course, we're jumping subjects a little bit as we go through the high-speed version of this. This is the mouse click math. The average person clicks a mouse 427.2 times a day during their work period, during that 8 hours that they're working, if they're working on a computer all day. And then the worker is clicking, probably more than that, 1,000 times a day. So if you have a slow computer in your office that takes 4 seconds to respond each time you click the mouse, you're giving that worker an extra lunch break and you don't even realize it. Because look at how it adds up. If just 1,000 clicks at 4 seconds, that's 66.6 minutes. And they're sitting there waiting. You're paying them to sit there and wait. And your client that walked through the door that they're servicing, they're waiting as well. Your customer that's waiting on a report to be printed, your customer that's waiting for their data to be processed, they're waiting that same amount of time. So listen to your employees when they start to say that their computer is old, their computer is slow, and start planning that replacement. Okay, so we're going to jump in out of this right quick, and we're going to jump into more of the security section here. Phishing. If you don't know what phishing is when someone sends you a message electronically and pretends to be someone else, or pretends to be some service that is legitimate, and they want you to follow through and provide some sort of information. And this is how it tends to happen. A hacker is observing you and then will send an email or craft an email with fraudulent but yet similar information to try to steal funds or information from that organization. Once they get that, they collect that information and they start using that information. So this could be pretending to be a bank. This could be pretending to be your boss. This could be pretending to be your accounting department, maybe the payroll department. When they send you something that looks real, it looks like it's absolutely from that person, but it's not. Or maybe it's absolutely from that bank that says you need to verify something, but it's not. The cycle continues once they gather that information, because now once they are inside your email, once they're inside your data, they will then read that information and send it to everybody else. So if you're running a business and you have a client list in your email, or maybe a client list database saved on your system, once somebody has fished enough information, maybe they've fished for financial, maybe they've fished for passwords, they're going to start sending information to other of your clients. And then hopefully they don't fall for it, but chances are if they send enough of them out there, they will fall for it. I'm going to give you an example of how this starts. This is an example we saw a few months ago where a company got emails to everybody in the office, got this email, and it made it look like their Office 365, their email account with Microsoft was going to expire. But if you notice, it doesn't say change your password or go to the website and update your security or anything like that. It says, click here to save the same password. Keep your same password by clicking here. Well, that should be a red flag, because that is how they are collecting your current password. And if you notice at the top, it came from an email address that was not related to that company. It's not related to Microsoft either. And that's one thing you'll make sure you want to look out for. And I'm going to talk about that in a minute a little bit more. But one of the things is that you guys who are employees are still on the front line of a lot of these phishing emails. You're going to see it first before your IT department does. So it's good for you to be vigilant and aware of these types of things that come through. Here's one that pretended to be, it was from Southern University. Seems harmless, about a piano that they want to sell. But once you interact with that email, they want to gather more information, probably see if you'll give them a credit card number or a bank account to transfer some finance funds. But you notice at the top here, it didn't come from Southern University. They put the logo down here to make it look like it was real, but it actually came from a Gmail account. And of course, this came to Southern University, so they had a warning message that this came outside of their Southern University system. So just to make the receiver aware that even though it pretended to be from Southern, it was not from Southern. Here's another one that came to Louisiana Department of Culture and Recreation Tourism, and it also appeared outside their system. They were fishing for information and they wanted people to click on this link to change their payroll information. This actually did happen. Some people did fall for this and click this link that is not really paychecks.com. You can see they put a slightly different spin on the name. And of course, they had their external email warning. So that was a warning as well. But if you click the email, it brought them to a website that looked like it was paychecks.com and waited for them to enter in banking information. Once they entered in that banking information, the hacker then withdrew a lot of money, from as much money as they could withdraw from that person's personal account. One last thing about phishing here, it doesn't have to come in as just an email. It can also come in making it look like it's a real invoice from a real customer. This actually did arrive from a real business, but if you notice at the bottom, they wanted to wire the money to a different bank account than where the business is located. That should be a red flag right there. This is a business located in Bogalusa, but they wanted the money wired to a Capital One bank account in Lafayette. And of course, it says at the bottom, pay by wire only, which is kind of fishy. Who only gets paid by wire is kind of, I think anybody who needed to accept $35,000 would take it any way they could, but they, of course, made sure to put in there pay by wire only to make sure it was irrecoverable if they got the money into that account. Now, this brings up an important point, that just because your office may have top-notch IT security, it may have rules in place, policies, and everything that makes sure that your system is protected, your network is protected. Your clients and vendors may not be. This advertising company was not secure, was not very secure. So they got hacked, but the email went out to all of the people they interact with to see who would bite and see who would send them money. If you ever run across something like this, pick up the phone, call the people, find out, get a second opinion from somewhere. Whenever you're, especially if it's something of this matter with something with finances, double check with somebody, talk to a person. Okay, and of course, the popular thing right now, again, is ransomware. This is an example of a ransomware attack. If you see something like this on your computer system, turn it off. The first thing you need to do, doesn't matter. I know they say try to properly shut down your computer, but in this case, pull the plug on it. Then of course they have different variations on how these things look, but essentially what it is doing is encrypting all your data so you can't access it. And I can't enforce this enough and reinforce this idea enough. This is why you have backups. This is why you keep backups of your information, as many copies as possible in a safe location. Not just if the computer crashes, but if something like this occurs and you can't access your data. This could, if you have a network in your office, the PCs are interconnected perhaps. This is how that information will be irrecoverable unless you pay these people the money. Now, the question is, do you pay them the money? No, they could still just keep the money and run. And of course, they want it usually in Bitcoin, which is not easily traceable. It's traceable, but not easily traceable. So in case you're wondering what ransomware is, or maybe you've heard it on the news, or maybe you've heard about people getting hit recently, it restricts access to your computer in some way. It usually scrambles the letters of all your files, blocks logins, changes passwords, and keeps you from being able to use the system almost at all. And of course, the hackers have the key code to unlock this information. And again, sometimes they'll unlock it if you pay them, but sometimes they don't. And it's a 50-50 shot on whether or not they will or they won't. You could be throwing money into the pit if you pay these guys. The best things to do, power down all your systems that are affected immediately. Alert your IT department, personnel, or contractor, so that they will let you know what the next steps are. Alert the staff members and any clients involved. If you fear that any of that information may have been stolen by the hacker before it was scrambled on your side, alert those clients, let them know what's going on. We had a quite interesting situation that happened over at Xavier University in the past couple months. And I had a little bit of an inside information on what happened. It looks like their computer system was hacked and they ran ransomware, but the hacker kept a copy of all of that information to hold that data ransom for who knows how much money in case the university would pay it. Here's where the university was incorrect. They announced that they were hacked this month. In January, at the beginning of January, they announced that they were hacked. Student information from the university was stolen. Their mistake was they did not let people know when this originally occurred. They should have let people know as soon as it happened. I had a buddy of mine, she was at Xavier, she was doing a special project and expected to get paid for it. They went in line to pick up their paycheck and they said the computers were down. Well, this was shortly after Thanksgiving. So that means that the computers that were hacked shortly after Thanksgiving, but they just let all the students know in January. And that will not just lead to a moment of distrust, but it could also lead to lawsuits, because during this time, how many students had their personal identification stolen for that month or month and a half that they could have gone through some procedures to lock down their credits, credit markets, lock down their social security number, put some protections in place. They didn't do that for a month and a half while that information was being held by the hacker. Kind of irresponsible, in my opinion. If you find out something has happened, alert people as soon as you know that something has happened. And of course, have your IT department recover from the backups and make sure that they close those security gaps if you've been hacked and have a ransomware attack. Excuse me. And of course, you don't want to be in a situation where you say, what backup? You can't just hope nothing will happen. you want to always have a backup copy of anything important. If you're working on a special project, it won't hurt that if you're working on a special PowerPoint document, QuickBooks company file, it won't hurt those couple minutes it'll take you to save an extra copy somewhere on a flash drive, on a backup disk, may save you if anything happens. And of course, who are the targets for cyber attacks? Don't raise your hands all at once. Who are the targets for cyber attacks? A lot of people think that they're immune from cyber attacks. Well, I only do this one small thing, or I only do this type of business. Nobody's looking to cyber attack my company or my organization or my nonprofit. Nobody's interested in that. That's incorrect. The answer is everyone is a target. These hackers don't care anymore. They're not just looking for the big hospitals, the big governments. No, they're looking for anybody who will fall for a phishing scam, who will have an insecure network, who hasn't replaced their computer, who has not and left it running the same for 10 years, who has a firewall that's 8 years old and never had any updates. They're looking for anybody they could get money out of. This is a business to them. This isn't the neighbor down the street with the little boy in the basement trying to hack something for fun. This is a business operation for them. It is important that everybody be aware that they are vulnerable. Okay, so some solutions on what to do and how to stay up to date on all this. So regular technology training is important for your staff. I know, again, people will just think, I'm gonna just hire a guy and he'll take care of it. But the staff needs to be educated on what they're gonna be interacting with, what they're gonna see. The IT department cannot just be the group that says, well, I'm just gonna protect you from everything. But they're not sitting over the shoulder of every employee and every worker in your office. It's important to train the staff to make them aware of what they may see and what is available. Of course, the external email warning, like you saw in the Louisiana State email and the Southern University email, those are important. So you let people know what emails are actually occurring within the office and which ones are coming from outside the office, so that they're aware on what to check on. And again, you may be protected or as protected as you want, as you try to be, and being very careful, but you cannot always count on your clients and vendors to do the same. Keep your passwords updated regularly. Use complex passwords. 2FA stands for two-factor authentication. This means that you can set up your accounts that, especially for that log in online, maybe your banks or your emails, that will send you a text to the person who's the holder of that user account to verify that, yes, this is this person logging into that account. It's not 100%, but it's an extra step. Pay attention to any important announcements coming from your IT department, and pay attention to anything unusual that may happen. And of course, work with your IT department. Send them things that you think are scams and let them know, verify with them what it is or what it isn't. Don't hide if you're constantly getting a large amount of junk or getting error messages on your computer. Let them see that, make them aware. IT can only help block things and filter things that they are aware of. And of course, alert your IT department of any changes to your office, hires, fires, construction, special projects. Right quick, a lot of people will aren't aware that they're supposed to tell their IT department before they fire somebody, so that when they do, that email account, those user accounts are not still active and not just left open and available for a hacker to get in, but also for that person who might have a grudge to come back and try to delete something or mess up something with your business. So that is the short version of our IT needs review in cybersecurity. If you need to contact me or have a question, I answer email all the time. You can follow me on Facebook and Instagram. You can visit my website, which now does have an updated picture of me that doesn't look like I did 20 years ago. And yeah, I'm open to anything if anybody runs into something anytime. And if you have any questions about this presentation, of course, go ahead and send me an email. I'll be replying to emails later today. And all right, I'm going to turn this back over to our master of ceremonies.
All right, thank you, Stephen. And look, y'all, I know that was the longest part of today, but that is probably the most important part of today. And hopefully everybody got the hint. I want to touch one thing that Stephen said about the mouse clicks and wasted time, which is, you know, some of you, my older clients have seen this. Is something I did years ago. This shows you what how much you're throwing away. If you've got 10 employees and you're paying them $12 an hour, if they are wasting 5 minutes a day, smoking, talking, checking their Instagram on their phone, posting whatever, it's costing your company $5,100 in net income. And that number is just for 5 minutes a day. So now imagine if your employees are spending 20 minutes a day doing things they shouldn't be doing. That's $20,000 a year it's costing you with just 10 employees. So it's very important to remember. Okay. So before we move into the Taxstone part, which actually I'm going to, I want to say, while people are still on here, we want to thank you for those of you that donated and supported our fundraiser that we had. We had our Warm for the Winter campaign last month, and we were able to get supplies and documentation. I need to mention, I forgot, we do have one new employee this year. My granddaughter up here named herself as assistant CEO. So if she calls any of y'all or I'm not available, you can call her. But anyway, but we were able to raise enough money to supply hats, scarves, gloves, socks, and sleeping bags to 240 of our homeless population downtown. And so we were, oh, and by the way, and she purchased some coloring books with her own money to give away to the kids while we were down there. But anyway, so we just want to thank everybody who did donate for that. And just to let you know, shameless plug, we will be having a spring hygiene campaign where we're going to put together hygiene products for our homeless population. So thank you again for everything you all did. We really appreciate all the help that people gave. Okay, so I wanted to really quickly talk about the Taxstone software that we have. And I mentioned it earlier, and it ties in. This is, because of the computer issues that we had, and it's to make sure that all of your information is safe. Only about half of the people, we sent the link out to our 723 clients. About half of you have signed up. I see a lot of you have already done your tax organizers, uploaded documents. This will be the standard, the practice going forward. If you have things that have any sensitive material, or you're going to need to send attachments, then you need to go ahead and upload those for us in the portal. We do get notification as soon as you upload them to tell us that those things are in there now. So no need, there's nothing wrong if you still want to text and say, hey, I just put some stuff in the portal, but we already know. I have it set up that it alerts me, Pam, Jamie, Adele and our receptionist, so everybody knows when the things come in and who put them in there. So from now on, we're not going to accept emails that have, those kind of personal attachments and stuff to them to make sure that we are safe. You can, the TaxStone will be able to be used to securely save all of your documents. We will be able to put documents in there for you. So once we complete your tax returns, they will be in there. You have a permanent access to that, regardless of whether we keep up the about $8,000 a year subscription or not. So if you're at the bank, you'll be able to pull your own documents from there. We'll have them all organized into year for you, so that if you go to the bank and they say, we need your last year's tax return or we need your 2020 tax return, they will all be in there for you. Additionally, any other documents that we want to upload, and certain tasks that we're going to put in there that we need you to complete, and it'll have timelines or deadlines on it for you to help keep you on pace. So I'm going to use this as an organizing factor. It might be long overdue. We need to get away from this paper that we've been dealing with. So everybody, I hope you don't have any issues with it. If you do, you can let any one of us know and we can walk you through what you need to do to make sure that it's correct. Okay. And let me pull back up and share this. If I can, oh yeah, well, oh yeah. I'm getting better. So the last part, want to move on to a question and answer type session. If you had any questions about anything that we covered, or you need to, you're wondering something that we did not cover, we'll just get you to unmic your microphone. If you want to give yourself a shameless plug, you can unmic, say your name and your company name if you want to plug that. If not, just ask about a question. And okay, so somebody just sent in the chat session. What date will you start processing S Corp returns? So tax season officially opens January 24th. We are putting in information now for people's returns. We will start processing the S Corps starting that date, although we're already inputting information so that we can just basically hit send on some of them. As I mentioned, we have 723 active clients and another 350 or so that we just do returns for. So we will have to kind of prioritize these a bit. S Corp, C Corp partnership returns are all due by March the 15th, which is a month earlier than regular returns. So we will most likely, be focusing on those. If you have a different type of structure, like you're just an individual with a C, with a Schedule C, and you have an issue like you're needing it to go to the bank or something, please let us know and we'll pull it forward. But we're going to start on the 24th so that we can be done by February 15th with all of our S Corp filings. Any other? Yes. Hey,
Okay.
Gwen.
Hey, Gwen Darcy with Keller Williams First Choice. Been a realtor for 24 years. Okay, so I'm the late bloomer. Got a question. Thank you so much for helping me get that LLC.
Mhm.
When my company pay me, does it matter if they pay me in the account of Gwen Darcy, or should I have a specific account, Gwen Darcy LLC?
Okay, so when we set up an LLC, your LLC is your legal protection. And that means if you sell somebody a house and there's a fire at that house, a couple of weeks later, they had people in town staying with them to visit the house and 10 people die, they're going to sue you, they're going to sue the closing company, they're going to sue the full Keller Williams, they're going to sue the people that sold the house, they're going to sue anybody that did any work in the house. That's just the way it goes. So you need to be focused on separating your personal and your business. You need to have a business checking account, have Keller Williams pay the company, because I did get you an EIN number. So they need to pay the company. You need to put that money in that business account. pay your business expenses out of there. Like if you take people for meals or you buy things for, you know, if you're going to do some house staging or something like that, and pay all of that out of the business account. Then whatever you need personally, just transfer it into your personal account and start using your personal account for your personal items. But absolutely, everything should go through the business once you set it up.
Awesome. Thank you.
You're welcome.
I have a question about that.
Somebody, hold on, somebody has a question in house. Ebony.
So when you say transfer, do we write a check to ourselves?
Okay.
Or you can actually do a bank transfer?
Right. So the question that Ebony asked was, when I said transfer, do we need to write a check from the business to the personal or transfer? No, you can transfer. The exception to the separation rule says that, and the best way I can explain this is right after COVID, I had this plastic shield up on my desk, and there's a slot at the bottom that passes, you can pass papers through. And that shield is your protection between the two companies, but it allows you to pass as much money from the company to you individually and you individually back into the company through that slot in that glass without violating or having a problem. And it doesn't specify that you have to do it by check. You can do it by transfer as well. So hopefully that answered that question.
Hey, Amit, it's Tiffany with ATM.
Hey, Tiffany.
Everything was great. Of course, I didn't, need a little help with some stuff, but what day did you send the email to get logged under the Dome?
We sent that a couple of weeks ago. So if you have, no, I think we sent it last week. So if you haven't gotten it, I'm going to make a note and send it to you. And if anybody else on this call has not gotten it, just shoot me a text and say I haven't received it, and I will email it over to you.
Thank you so much.
And it's, like I said, it's really easy. Just so everybody knows, when you get the invitation, you're only going to do the login, but it will tie all of your individual and company accounts together, so that on the lower left-hand side, once you log on, you'll see your name. You can click where your name is, and it'll open your other companies, because most of you have more than one company. And then you can click on each individual company, upload documents, or I would recommend there is a chat feature in there as well. So make sure you click to activate the chat feature. That way you can always just send us a chat, and any one of us can answer your question back quickly, or, continue to text us and stuff. Just, we're trying to stay away, make sure we stay away from all, personal information being texted or sent through emails.
Did you see the question from King
No, from who?
James, or I'm sorry, King Emmanuel? When does the business coaching start?
Hey, Cedric, unmute for a second and ask me what you mean by that question.
I just heard you mention when you were talking about the partnering part, and you said you were going to move into doing a little bit more business coaching.
Mm-hmm. So that's something that I've actually been doing. I just haven't been able to do it enough. I've been, last year, I traveled just about every week. It's wonderful. We got a lot of points for airfare and hotels, but this year, I've made a decision that I'm also only going to be traveling every other week, which means, I'll be back in town at least half of the year. And with Jamie and Pam taking over some of the more day-to-day responsibilities, I'll have more time to set up the coaching meeting. So you just need to, to text me, and, or if one of the emails, you can go in and book an appointment with me. And it'll start immediately. So I have to be I've been back this week, but I have to be in DC for the latter part of next week, and then I'll be back for about a week and a half again. So anytime you're ready, just go ahead and text me and we'll set something up. Also, you can click the link in the bio. There's she just put that, and where's that bio? The chat box. Or she said, or any of my social media. So that link tree will have the Facebook, Instagram, and whatever else, YouTube, I think, and something else. Okay. And by the way, just so you know, this will be uploaded, like I said, to the YouTube channel. The prior years are there, as well as a bunch of speeches I've given to different business owners, especially new business owners, and on good business practices and things that'll save you money. Let's see, is Pam still the primary person to reach out to regarding processing payroll? Absolutely. Pam is still going to be everyone's pretty much main contact. And she will let you know if she needs to get some information from one of the other of us. You will contact Adele on any tax issues. And then you will contact Pam for payroll or, monthly accounting or anything like that. Although Jamie is technically the monthly accounting coordinator, but she will get with him on anything that, they need to coordinate, but she is still the chief operating officer. And I should add something else. The other thing we will probably change a little bit too is that all of your payrolls and all of your monthly accountings are actually assigned to a specific individual. And you probably have already heard from them, but we will most likely have you start also contacting them directly to kind of ease Pam's load as well. So that's something we'll work towards growing and doing. Hi, Tia. Tia owns H. Kyle Boutique. I should have said, let's see who else said something. Jamila McKee owns a private investigations company, and she is very good. So if y'all need a PI, let me know, and we will pass her name on to you. Okay. Tia owns H. Kyle Boutique in Gonzales. And how do we submit new employee information? Will that be through the portal? Yes. We will, if you let us know that you are bringing on new employees, there are folders already in your portal, but we're going to put a folder, and we're only doing it as people are having this thing come on, but we'll put a new, a payroll folder in there, and we'll put a folder in there for like new client signups as well. So yes, we will put that and all the forms in there. You'll fill them out and just, they'll be in that, and we'll be able to access them and see them once you fill them out. I'm sorry, I should have said, and Jamila just posted her contact for GMAC.
Can you tag
Hey, Tia.
Carolyn's dress? Oh, look, the medium. Oh, I didn't print these.
Hey, Tia, we hear you.
Oh, sorry.
Could be worse. We've had other things recently on Zoom calls. Okay, anybody else with any other questions for us? I see people are starting to wane off, which is fine. Any other questions? Bueller, anybody? Okay. All right. Well, I want to thank everybody for getting on here. I know it seems really rushed. It's a lot of information. You can go back and review on YouTube, or certainly contact us with any additional questions and individual questions you have, and we'll be glad to help them. Enjoy your day, and everyone have a good one.